Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Yesterday, I reported an uptrend in Bitcoin, reaching 99,450. But there was a red flag. Newly generated long liquidation leverage was building up below the price action. I highlighted this with a purple box spanning 98,400 to 97,800. My expectation was a dip into this level, followed by a strong move upward, targeting the short liquidation leverage sitting between 99,600 and 103,000. However, the market had other plans. Bitcoin dipped into the long liquidation leverage box, but instead of bouncing, it slid further, breaking through the 96,500 support level with little resistance. It felt like watching a plum cake fall apart at Christmas. Only the 95,000 level provided some stability, acting as a temporary floor. At the time of recording, Bitcoin is trading in a tight range between 95,000 and 96,500. The real question now is whether this level will hold or if the market will dip further to target newly generated over-leveraged longs. The 3-day liquidation heat map shows a concerning picture. There is now a visible cluster of long liquidation leverage between 95,000 and 94,000. This setup strongly suggests that market makers could drive the price lower to collect liquidity in this zone. Remember this: liquidity is what fuels the market. Market makers are not your friends. Their job is to collect every available penny. This right here is an OG screenshot from the BitMEX Trollbox back in the days, showing how market makers think. Run the stops of the remaining plebs. I need a new Ferrari. While this paints a grim short-term picture, the longer-term signals are still giving us hope. 2 days ago, the daily wave trend indicator printed a green dot. Historically, these signals often mark the start of significant upward moves. It tells us that on higher time frames, the market remains bullish despite the current short-term turbulence. Another key point to watch is Bitcoin dominance. As Bitcoin's price struggles, dominance continues to fall. This is where things get interesting for altcoins. The dominance chart on the monthly time frame reveals an intriguing historical pattern. I have marked the Decembers of halving years, 2016, 2020, and now 2024. Each time, we saw a sharp decline in dominance, followed by a 13-month downturn. If history repeats, this signals the start of a potential altcoin season, lasting until January 2026. During this time, Bitcoin dominance could drop as low as 40%, creating opportunities for altcoins to outperform. But let us not ignore the risks. The market is heavily leveraged, and liquidations can cascade, creating more volatility. With new long liquidation zones forming between 95,000 and 94,000, this could lead to a deeper dip before any significant recovery. On the flip side, if Bitcoin reclaims 96,500 and sustains a move upward, it would open the door for testing short liquidation zones above 99,600. Another layer to this analysis is the broader macro environment. With the end of the year approaching, institutions are likely rebalancing their portfolios, and this could influence Bitcoin's price action. Historically, January has been a month of volatility, driven by fresh capital entering the market. Combining this with the long-term bullish signals like the wave trend green dot, we could see Bitcoin positioning itself for a strong move after this consolidation phase. So what is next? Will Bitcoin collect the liquidity below and set up for a reversal, or will the over-leveraged longs continue to drag the price lower? Watch the 95,000 support closely. It is the battleground that will determine the next significant move. If you want to stay ahead of the markets, join my free Discord. Click like, subscribe, and hit the bell for instant updates. And see you in the next one.